Hey guys, welcome back to the channel. Today I have another trading strategy which I'm going to backtest for you over 100 trades. I will tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. So this strategy involves two trading indicators, the exponential moving average and the no sure thing, also known as AST. So the no sure thing is a momentum indicator developed by Martin Pring to make rate of change readings easier for traders to interpret. Trading signals are generated when the KST crosses over the signal line, but traders also look for overbought and oversold conditions. Traders also combine the KST with other technical analysis to maximize the odds of successful trades. An exponential moving average, also known as an EMA, is a sort of moving average that gives the most recent data points more weight and relevance. The exponentially weighted moving average is another name for the EMA, so it reacts more strongly to recent price movements than a simple moving average, which itself gives all the observations in the period identical weight. So this backtest is based on the 1 hour time frame with a minimum of 1 to 3 risk to reward ratio. So that means that every dollar that we risk, we aim to make a minimum of $3. So here's the strategy. We go long when the KST becomes positive while the price is above the 200 EMA. And similarly, we go short when the KST becomes negative while the price is below the 200 EMA. We place the stop loss at the last swing. We don't have a maximum number of trades required at all times. And we move the stop loss to break even when the profit is equal to the maximum risk per trade. And the final rule is that we need a minimum of 1 to 3 risk to reward ratio. So let's get on the charts now so I can show you a few examples and then we'll dive into the backtest. All right, so here we are on the charts on the euro dollar 1 hour time frame. Let's go ahead and add the indicators. So we've got the KST and the exponential moving average. So we're going to change the settings of the EMA. We'll make it white, just so that it's easily visible. We'll change the length to 200 and the method to EMA. The rest can stay the same. And the KST settings, you can leave this as it is, but we'll untick the signal line, which is the red line at the moment. And we can change also to white and the thickness. So essentially, for a short position, the price needs to be below the 200 EMA and the KST needs to cross zero downward. So as you can see here, the price is below the 200 EMA, it crosses downward. You would either get in before that large candle or after. You would place the stop loss. Worst case scenario, you enter here, you miss the big move, you put the stop loss here, and you aim for a 1 to 3 risk to reward ratio. And eventually your take profit would be hit. So that's the strategy. Let me show you a few more examples and then I'll go straight into the backtest. All right, so here we've got a bullish run. The price is above the 200 EMA. The KST becomes positive here, so we go long. We place a stop loss at the last swing, and we aim for 1 to 3. Then again, it is crossed here, positive, here. So any of these trades essentially would have been wins. So this strategy works very well in trending markets. And here are a couple of short examples. So the KST becomes negative right here. We place the stop loss at the last swing, aim for 1 to 3 risk to reward. It becomes negative here again. Right here, we are not below the 200 EMA, and it becomes again negative right here. So in terms of win rate, this trade, for instance, did not reach the 1 to 3 risk reward ratio. However, it reached a 1R, which is the amount that we're risking per trade, in open profit, which means we would have moved our stop loss to break even. So it would have been a break even trade right here. So we wouldn't have lost anything. So let's go ahead and do the back test, and I'll see you for the results. All right, guys, so here are the results. Pretty insane. So we had a maximum drawdown of 19%. We were risking 5% per trade with a risk to reward ratio of 1:3. We had 45 wins, 21 losses, and 34 trades that ended up at break even. We had a maximum of 5 wins in a row and 3 losses in a row. So all of this gives us a win rate of 68% over 312 days. So essentially in less than a year, this has made 988% on your money. So if you would have started with $10,000, you would have ended up with almost $100,000 in less than a year. So the results are pretty amazing, quite surprising, and this works extremely well on trending markets. So this is why Depending on the time frame that you use, the strategy's performance might differ. So let me know in the comments what you think, if you can think of any way of improving this strategy, and I'll see you in the next video.